Street wants to stop a crypto project that is exploding. That project is Hyperliquid. So why now? Because Hyperliquid is no longer just a platform for crypto traders. It's starting to open up to other markets, markets that traditional finance sees as its own territory. As a result, Wall Street is now asking US regulators to step in and regulate all of this. But behind that, something much bigger is happening. I'll explain everything in today's news with a major focus on Hyperliquid, but we also have plenty of other stories to cover. A massive Bitcoin purchase worth more than $2 billion, decentralized finance, crypto ETF, and much more. Hello everyone and welcome to Crypto Red, the channel dedicated to crypto news. Let's begin with Hyperliquid. Honestly, what is happening with Hyperliquid right now is pretty incredible. The token has been rising for some time, but the biggest story is what is unfolding behind the scenes. This comes directly from Bloomberg. According to the report, the Chicago Mercantile Exchange, the CME, and ICE, the parent company of the New York Stock Exchange, have clearly asked the US commodities regulator, the CFTC, to regulate Hyperliquid and to regulate it under rules similar to the ones they themselves have to follow. To understand why this matters, you need to know that many of these traditional markets are closed on weekends, for example, or other stuff. They do not do a lot of things that Hyperliquid can do. Hyperliquid, on the other hand, runs 24 hours a day, 7 days a week. It is far more convenient for traders. During the tensions and conflict involved with Iran, traders were going to Hyperliquid over the weekend to speculate on oil prices. There was a huge surge in activity. Hyperliquid saw a major explosion in usage because of that. And now the CME and ICE are essentially asking the CFTC to solve that problem for them. From their point of view, this is unfair competition. They want this activity to be regulated. And they're also saying that more and more US traders are watching prices on Hyperliquid, and that prices on Hyperliquid are starting to influence prices on traditional platforms. The argument is simple. If Hyperliquid is becoming relevant enough to affect broader markets, then it should fall under stricter regulation. Personally, I see this as established financial giant watching a product that is simply better than theirs, and they're trying to do stuff. Like I said, Hyperliquid is open 24/7, it is transparent. Traditional finance still operates in a much more opaque environment. Hyperliquid works better for many users. It is easier to use. There is less friction. You do not have to go through layers of intermediaries, endless processes, and heavy KYC hurdles in the same way. It is simple, direct, effective, and I think these major institutions are basically saying we need to do something about this because we can't compete. But I also think there are maybe another layer to this story. There could be a hidden strategic interest here, because I'm going to tell you why. You know ICE, the parent company of the New York Stock Exchange, where they announced a few months ago that they would invest up to $2 billion in Polymarket. Polymarket is primarily known as the prediction market, especially around the election and major public events or sports also, but over time it has been moving more and more toward trading. For example, see markets such as will Bitcoin go up or down over the next 5 minutes. That is essentially trading. You are speculating on whether the BTC price will rise or fall over a very short time frame. And even more interestingly, Polymarket has said that perpetual markets are coming. These are exactly the flagship products that made Hyperliquid so successful. The ability to trade crypto and potentially other assets 24/7 with a very high leverage. So I do think ICE may also have an interest in slowing down Hyperliquid, while a project like Polymarket, in which it has invested heavily, gains ground and potentially becomes the more regulated US-friendly alternative. So at the very least, that possibility deserves to be considered. But for now, Hyperliquid is not regulated in the United States because it's simply closed. It is simply close to the US. If you are living in the US, you can't trade in Hyperliquid without using a VPN. And that is an important point. The founder of Hyperliquid is American, but the project is being developed from Singapore by a remarkably small team of just 11 employees. And despite that, the project is absolutely taking off. There is one metric that is particularly important when looking at perp dexes, perpetual finance platforms. It's the open interest. Open interest gives you an idea of how much money is actively committed to open positions in the market. To put simply, it shows the total value of positions that remain open at a given time, and this can't be faked. And on Hyperliquid, this number is huge. We are now at $8 billion. And this has been growing for a few months now. Over just the last 2 months, open interest on real-world asset markets, the RWAs, has doubled, reaching $2.6 billion. This is a market that did not even exist a year ago. And now a significant share of trading activity on Hyperliquid is coming from RWAs. You can also, you can see it in the category HIP3, HIP3 on Hyperliquid. This is where you can trade the S&P 500. This is where you can trade oil, gold, silver, Nvidia, and Cerebras, also a company that went public in the United States over the last week, I believe. And the other major story is the SpaceX IPO. And SpaceX is expected to go public on June 11, and there is a link to Hyperliquid. The valuation could be absolutely massive, around $2 trillion. And on Hyperliquid, through the main HIP3 market operator, XYZ, which is currently the entity launching the largest number of these markets, we also saw a SpaceX market go live. You can see it here. There's already around $25 million in open interest, and the implied valuation has already flirted and even crossed the $2 trillion. So what we're seeing is very clear. Hyperliquid is starting to attract much more than crypto traders. It began as an exchange where people could trade crypto with leverage, then it launched spot market, then it launched HIP3, meaning the real world assets markets I've just explained, and now it is also preparing to launch outcome markets. These are somewhat similar to prediction markets, at least in the current form. For now, it is mainly simple questions like, will BTC be above a certain price on a certain date? So more like option products, but eventually they will have more and more markets. It could eventually compete with Polymarket for sure. And we are starting to see different platforms converge in terms of functionality. Polymarket on one side is adding more trading, and Hyperliquid on the other side is adding more prediction markets. And this is precisely what, in my opinion, is beginning to worry traditional financial institutions. I genuinely believe that Hyperliquid's ambition scares them, because the ambition is not small. The ambition is to host the whole finance, the whole global finance. And they are really well positioned for that. They already have spot markets, perpetual futures, and much more. Perps are especially important here. There are financial instruments that was invented in crypto, derivative contracts that do not expire. They are extremely practical for trading. This product was born in crypto, but there is nothing inherently crypto specific about it. That is why we are now seeing perpetual markets appear on other type of assets like the S&P 500 and many others. Traditional finance does not really have a direct equivalent at the same scale. So Hyperliquid has a real advantage on that front. And I think this trend will continue. We are still at the very beginning of this project. The Hype token also has performed really well recently, especially after the news around SpaceX and after the announcement involving Coinbase and Hyperliquid as well. The Circle also partnership with Hyperliquid. The key point is that USDC is becoming, in a way, the official stablecoin of Hyperliquid, and Hyperliquid is expected to receive around 90% of the revenue generated from the treasury yield back in USDC balances on the platform. So overall, there has been a flood of very positive news around Hyperliquid in recent days. And you know what? Let's talk now about the broader markets. Of course, the market is down. You have probably noticed it. Once again, Trump is threatening Iran and oil prices have moved higher. They have clearly risen over those threats. He posted on Truth Social warning that they need to reach a solution quickly and that time is running out and that they need to act fast. In other words, he's once again putting pressure on them and making threats. And there is currently a ceasefire, but it is far from guaranteed that it will last. And these renewed threats against Iran are worrying financial markets, including both equities and crypto. That helps explain the current decline. But honestly, at this stage, I do not see anything dramatic. I'm not worried at all about this dip. Of course, it is annoying. I'm not going to pretend it's not annoying. It has been frustrating for a while, for several months. The market has mostly been stagnating, and most cryptocurrencies are still trading at levels that are not particularly exciting. So yes, let's hope things finally start moving. But for now, we are still in the same zone. I almost feel like I was saying, the exact same thing 3 months ago, and that we may still be saying the same thing 2 months from now if this Iran situation keeps dragging on. And then really, to everyone's surprise, Strategy announced today that it bought nearly 25,000 Bitcoin. They now hold more than 843,000 BTC. And why do I say this came as a surprise? Because Strategy had announced that it was raising funds, but at the same time, it has also repurchased debt. They repurchased $1.5 billion of debt. And now they're basically saying, yes, we raised money, yes, we repurchased debt, but look at what we just did. We raised $2 billion by selling STRC, their products that yield 11.5% yield. I went directly to the official document, and yeah, we can see all of this. They sold $2 billion worth of STRC, and they bought $2 billion worth of BTC. So Strategy has just made a very, very aggressive move. It had been a while since we had seen Bitcoin purchases of that size from them. So yeah, it's really good news for BTC. And you know what? There was kind of a price drop recently around the news that Strategy might sell BTC if needed, and they will eventually sell it. And actually, it was not. It was. I heard some interview of Saylor. He was saying it was more to reassure the people who provide them with capital, the lenders, because it showed that Strategy has the ability to sell BTC if it ever needs cash, and because of that, lenders may be more willing to give them money. They can tell themselves, at worst, if necessary, Strategy can always sell some of its BTC. Whereas if Strategy has remained in the mindset of we will never ever sell BTC, then lenders might have wondered what happened if Strategy needs liquidity, what happened if it has to repay debt or pay dividends. At least now the situation is clearer. So I think that is part of the idea. Strategy is still buying BTC very aggressively, but is also creating a framework where selling BTC is not viewed as something impossible or shocking. That said, I've already told you STRC worries me a little. And do you know who is buying STRC in massive amounts? I want to look at the official stats shared by Strategy, and it turns out that around 80% of STRC buyers are retail investors, ordinary individual investors. So it is really the general public buying this product. I kept calling it, it's not a token, it's a product, it's more like a stock. But STRC, yeah, it's risky. It offers an annual yield of 11.5%, and retail investor, like I said, love this. But yeah, I expect, in fact, I believe that there's only 20% of buyers who are institution because institution lost money on other instruments provided by Strategy. For example, at the last debt repurchase, Strategy paid only $1.38 billion on a debt that was originally being issued for $1.5 billion. So clearly the investors who lent them that money did not get the full original value back. So maybe institutions are not especially enthusiastic. Personally, I already warned you about STRC. I do not. Yeah, it's really risky. Like I said, the yield could stop, the price could drop, and it could get really, really ugly. Now, let's come back to BTC and Iran. And what is currently happening around Iran is pretty incredible. We have an article from an Iranian media outlet explaining that Iran is preparing a kind of insurance system for ships traveling through the Strait of Hormuz. In practice, the boats would pay for this called insurance, and if something happened to a ship, well, the insurance would supposedly cover the associated losses. But honestly, it looks much more like a disguised extortion. The idea is basically pay for your safety, you will not have any problems, and it's almost like a toll system for the Strait of Hormuz. And why are we talking about this here? Because they reportedly wanted to be done in BTC, the insurance to be paid in BTC. So once again, we have another potential use case for BTC. The idea had already been mentioned a few months ago, but then people stopped talking about it. We will have to see what happens, because I imagine the United States could respond by saying, if you pay that, you may face consequences. But still, this is something very powerful about BTC. It highlights Bitcoin's neutrality. No one can technically prevent Iran from accepting Bitcoin. And that level of decentralization is remarkable. The United States may strongly disagree. They could even try, in theory, to encourage miners not to include certain transactions in specific blocks, but other miners around the world would still process those transactions, and eventually they would go through. I found that very interesting, and yeah. And still on Bitcoin, I recently saw some news about the Bhutan country. It's a small country in Asia that had sold $1 billion worth of BTC that it had mined before. But now, representative of this small country just said that, no, we did not sell anything. We have not sold BTC. And the new theory is that they transferred funds to exchanges, but ultimately did not sell them. Maybe they moved them from, I don't know why. Maybe they used them as collateral. Maybe they took out loans against them. We do not know exactly. But according to several sources, the Bitcoin may not have been sold after all. And that is quite surprising. There are also sources close to the trading firms that reportedly received Bhutan's Bitcoin, and they are confirming that no sale took place. So now we have several separate entities pointing in the same direction, that that no sale happened. And this is strange, but in the end, it's good news if it's true. But yeah, and once again, but we can't know for sure, because once the BTC is transferred on the exchange, we lose traceability, transparency, and it's more like a black box. Next, let's talk about Aave. We already talked about Aave and Kelp and everything around that situation. In the end, things are turning out well. Aave has restored the previous limits on the affected markets. So everyone who had funds on Aave lost nothing, and that is excellent news. And even those who had exposure through Kelp did not lose anything. But for me, the biggest loser in this whole story is Layer 0. The protocol that was initially hacked, the bridge protocol that allows crypto assets to move from one blockchain to another. A lot of projects are now migrating from Layer 0 and moving mainly toward Chainlink to its CCIP system. And now we have another very big DeFi name joining the migration, Lombard. Lombard is especially well known for its tokenized BTC product across Ethereum and other blockchains, and they have announced that they are moving fully to Chainlink. They have around $1 billion worth of BTC, so it's huge. And the big difference, I've already explained this, is that Chainlink uses default configuration with multiple validators, around 16 validators, and it is the standard setup, and those validators collectively confirm the transaction. With Layer 0, on the other hand, projects can customize their own configuration, and some chose to rely on one single validator. In the case of Kelp, that validator was tied to Layer 0, and it was compromised. And this is what caused the problem. So by default, Chainlink is more secure, and that is exactly what I have been saying. I think quite a few projects will continue migrating toward Chainlink because the default setup is much less risky. There is less room for misconfigurations. So yeah, next I want to talk about the spot ETFs in the United States that are coming, and I want to talk about BNB ETFs. Grayscale and VanEck have both made amendments to their ETF applications, and usually that indicates ongoing discussion with the SEC and changes being made in response to the SEC comments. So yeah, this could be getting closer. I think we will see the first wave of Hyperliquid ETFs comes to completion first. We are still waiting for Grayscale and VanEck ETF that have not yet launched. I think that should happen soon. And later, a few weeks later, I don't know when, we could have the BNB ETFs. So yeah, I hope you enjoyed the content. Feel free to like the video, leave a comment and subscribe, and I'll see you tomorrow for the next one.